Professor Sweezy. Chapter 5, take 2 in 5, 4.
Okay, in this chapter, we're going to cover the following objectives. First, why do we need a cost systems? And we'll define the job costing system. We'll discuss the interrelationship of cost accumulation, cost measurement, and cost assignment. We'll identify the source document used in job order costing. We'll describe the cost flows associated with job order costing. First, why do we need a cost system or cost accounting system? First, to prepare the financial statement, management needs a cost of goods sold figure on the income statement and on inventory figures on the balance sheet. For internal needs, management needs product cost information to establish prices, to compare actual with budgeted figures, to properly decide to make or buy decisions. And often outsiders such as insurance companies or government agencies have a need for product cost information. Job costing is used by companies that produce unique jobs tailored to customer specifications. Examples of companies using job costing system: service companies such as public accounting firms, consulting firms. For manufacturing company, example will be ship and aircraft building. In job costing, costs are accumulated by job. Once a job is completed, the unit cost is determined by dividing the total manufacturing cost by the number of units produced. Direct labor costs are determined based on time ticket documents. Direct material cost based on material requisition form, and overhead costs are applied based on an estimate. Job costs are tracked using a document called job cost sheet, which includes cost of direct labor, cost of direct material, and the amount of overhead costs applied. Note that rather than using the actual overhead cost, we apply overhead cost based on an estimated amount. Recall the predetermined overhead rate, which have already been seen in last chapter. Since the former is not really available, the former is the actual cost, is not really available on time. This is called normal costing. Over a specific time period, raw material inventory is transformed by labor and support resources into work in process inventory, and then ultimately to finished good inventory. Work in process represent the cost of the jobs not completed. Basically, the cost flow parallels the 3 stages of productions. First, the purchase and storage of raw materials. Then the raw material inventory parallels this stage. Second, manufacturing using labor and other resources to transform raw materials into finished good. Work in process inventory parallels this stage. Third, storing finished goods. Then finished good inventory parallels this stage. Remember that work in process inventory is debited by applied overhead rather than actual, because the actual overhead costs are not known until the end of the period. Let's see now how costs flow through the different stages of production. Now I'm going to draw the cost flow. Was it okay?
Anytime.
Mm-hmm. Yes, let's start. Yes. Okay.
I'm sorry, I'm not